What's up, everybody? It is Ted here with Bodies and Wicks. Hope everybody's having a good day. And it's been a while since I made a video, and today's a good day to make a video because quite some weird things happening in the market, in the crypto market anyway. Of course, I'm going to take a look at my normal ones that I look at, which would be Monero, my favorite one. I love Monero. Yeah, Ethereum, Bitcoin. We'll take a look at some other ones too, like Avalanche had an odd day. I don't know if you noticed or not, but it kind of like spiked up, somewhere in the afternoon. Um, I don't know here. Let's just go ahead and take a look at CoinMarketCap. That way we can kind of get a look and see what happened during the day. So take a look at CoinMarketCap here. Go to the top, which is what I should be doing. Okay, so you can see Bitcoin kind of just didn't have anything going on today. Let me click X here at the bottom here. Ethereum up 6%, oddly. But hey, that's awesome. BNB only up 2. Cardano up 3.25. Ripple up 2.5. Solana up 4%. And Polkadot barely up. Polygon barely up. You know, and then you'll have something like, see, here you go, Avalanche. You had Avalanche up 6%. And then you had Ethereum Classic up 26%. And there was another one that was up really big too. Like that. I want to say, let me see if I can find it. Here, Bitcoin Cash was up 6.6%. Flux was up a lot too, I noticed. Lido DAO, here we go. Here at 9.6%. Curve at almost 12%. Bitcoin Gold at almost 15%. Ravencoin up 15% of all things. Here we go. Terra Classic, USD up 32%. Wait, it may actually make its way back to the dollar. Um, see here, yeah, here it was. Here's Flux, 22.6%. So that was another one. I was actually like, whoa, that's up quite a bit. And that's only the first page. That's only the, so who, I can go to page 2 and keep going, but um, I mean, it was up, down, all around. It was pretty crazy. Balancer up 7. Optimism, that one's up. See, that one's been all over the place too ever since it came out. Not too long ago. Up 5.8% is what it's saying. Well, I don't know why these are kind of. Are these kind of under optimism? Is that why they're doing that? I don't know. Audius. I can't believe how Audius is just kind of plummeted. I mean, I remember having Audius and it was like almost $3, and now it's 28 cents. Voyager token. Look at that. Up 51% of all things. Voyager token. See, this day has just been really, really weird. So, not for sure if I can make a whole lot of sense of a lot to, within the short amount of time that I do have. But what I can do is we can go over to the charts here and check them out and see what I can make sense out of. Let's see here. All right, so I am currently on Monero, right? So this is what I wanted to kind of uh, flesh out for everybody. So even though we've been up today, era may seem like we've been up a lot. To most things, we've been range bound. And what I mean by range bound is that we've kind of been stuck in a particular area. You can up or down. We haven't been too high. We haven't been too low. Here on Monero, the most recent low is 141. to the most recent high happening almost today, at nearly 160, or it did get above 160, or actually, yeah, it almost like it hit 160 today. Sorry, I do have my uh, my indicator on here. So my indicator is I think it was called God, I forgot what the original one was called, but I changed it around a little bit on Pine Script, and I put BXWs for Bodies and Wix's Smart Money Tools. I think it was called like fair value gaps, or super fair value gaps, or something like that. I don't know. But if you just search by Maku, by that name, Makuchaku and Faefe, if you search that name, you'll find it. But this is like one of my favorite indicators, because it is a smart money indicator. It tells you where all the fair value gaps are. It tells you where the breaking structures are. It tells you where all the rejection blocks are. Everything that I usually outline on mine, that I usually do have outlined. I may have bigger outlines on them. These just change with the with the time frame. So if I go from 4 hour to a 1 hour, then it'll automatically change. The way they've coded it will change with that. So I am looking at the 4 hour right now, and as you can see, I was talking about the range bound. So here's that range bound right here, and here you can see a fair value gap that has been is barely even open right here around 161.24 to about 161.80, somewhere around in there. And we're getting close to about 160, so it looks like it's heading that direction. But I would not be surprised if we did not see some kind of, because you could see there was a big spike at one point here back in August, of all things, late August. So what am I saying? Back in August, like it was so long ago, like the, the, the end of last month. Um, Actually, just a couple days ago, so I don't even know what I'm talking about. I feel like a retard now. So it was the very end of August. There was that spike we had in here. Just and then toward the middle of August is when we had that drop, in Monero. We had that drop because we had that. In my opinion, we had that phantom trend line. I was telling everybody about the phantom trend line. So I said, watch out for this. I said, this is going to fake everybody out, because it's going to look like it's going along this trend line. Then it's going to go against it. Then it's going to look like it's going to go with it. Then it's going to go against it again. And sure enough, it did. And it went all the way down to, well, if it would roll up here with me, all the way down into this old fair value gap. I think it was a weekly. Yes, this is a weekly fair value gap. So if we put it on the weekly, you would see from 1 week to another, it would go from here to here, and there would be basically a gap on each side, meaning that there would be no wicks touching, right? So that being said, that's what price looks to do in smart money. Price looks to go for those areas, and it's behind my head. So let me push it out a little bit more. Yeah, right in this area here. So price wants to get down inside of that area, because it thinks, even though on a 4 hour, it may look like it's going up and down and back up again. If you actually look at it on a weekly, which I'm getting ready to do, it'll look like there's a big gap in there. And not really so much of a gap as much as there is a big green candle, I guess you could say. And big green candle that doesn't have a wick on either side. If it doesn't have a wick on either side, then in a very, very, if you're talking large time frame, which is what I always tell people to do, try to go from larger time frames and work your way down to the smaller time frames. You will see exactly what I'm talking about. So you can see that it looks like it hit. Let me see here. like it's locked. Okay, yeah, it was locked. Yeah, I'm not seeing a wick right there. Or is that a wick? Okay, so the wick's up here. There it is. Okay. So there was your fair value gap right there. Yep. So that's it. This green area right there is the fair value gap. So that's what it would be looking to come down and fill, because that it would be considered an imbalance, and price looks to try to fill all the imbalances that it can. So if it leaves an imbalance there, then of course it's going to try to find the imbalance above, and it did. So the imbalance above would have been something similar. Let me see here if I can get the box going here, not the text. There we go. Okay. So above, we would have had this. So once it went down and filled that, it left this above. So it comes up, it fills that, and this is still on a weekly basis. So the next week, it comes up, spikes up through it. The following week, the current week that we're on, what I'm thinking is probably it's going to come up and fill the entire rest of it as a body before it may drop again. And the reason I think it may drop again is because you got to look back all the way back down here at all of these runs that we had and how many fair value gaps do we have down here. So here, let me see here. Here's the bottom of this one. Let me see here. And there's this one. So here we have a huge fair value gap on a weekly basis going from 129 to 136 that it could easily drop down to. Easily. So in here I'm putting false support down way down at 107. So, like I said, I've drawn this out way out in advance. Oops, wrong button. But if I were just to put a fib at the very bottom of this, and we were to go toward the top of this, where that 60, where you want to look for is anywhere between 61% or 62% and 88.6%, because that is where smart money is going to buy, right? So where this red candle is right here is where they tried to sell off to make everybody else sell off. And then what did they do? Right at the bottom, boom, they bought up as cheap as they could and pushed it the other way. And as everybody else was buying, they waited until it got to the perfect time, right? So there would be two equal highs here, and right here was probably a fair value gap, more than likely a daily fair value gap, because that's what usually happens whenever you have something like a weekly fair value gap, or if you're looking at a weekly time frame, usually drop down to the smaller time frame, like a daily, and then that's when you're going to find the next move. And sure enough, well, I wouldn't know if that's exactly where that is, but yeah, I think you can see. I think there's just a lot going on over here. Let me delete some of this, that way looks like looks like that may have been a 4-hour one. Oh, okay, there it is. Okay, so so here is the bearish order block starting down here where this wick is. So here's here is starting the bearish order block right here. So as soon as it gets to that area right there is where you're going to start seeing the rejections, because that is it's like the exact same opposite of what I was showing you previously down below, to where instead of pushing it down and then buying it all the way up, they kind of did the same thing. They did is they dropped it, they pushed it up really quick, and they made people buy with it. And as soon as they did that, then the smart money sold everything really quick, and then also shorted along with it. That way, it would drop really quick. And then as soon as it did that, everybody freaked out, panicked, sold with it until it got to a comfortable spot to where smart money thought they could buy it up again, which is right around $100 or so. Boom, they started buying it up, bringing it back the other way. So what I'm just saying is, I'm saying be careful. Um, there's nothing is I'm not trying to give financial advice or anything. Just trying to give you what I've seen in my experience in smart money. When smart money is all about the people who can push around the charts. That's what this is all about. They know how to push around the charts. Okay, so if we're looking at this on a daily level now, you can see that it's been rising, but it's been rising to a point that's probably going to hit a bearish order block, or it already has hit a bearish order block. Let me see here. You have this green candle. You got to generally you look for the last green candle before the next red candle closes below it, or the next succession of red candles close below it. So that would be this area here. So it is right around there, around 163, 162, which is where this first spike came up back around August 31st. First spike came up, got close. If it did not hit it, and if we look at the weekly, who knows? Maybe that's what it did do. It did hit the bearish order block. Yep, and it looks like on a weekly that would have been the bearish order block, because here would have been your low. Right, so in the weekly, it did hit the bearish order block. So that's why it got rejected. I also got stuck in the fair value gap as well, which is in between the two candles. So now it's probably going to try to fill that fair value gap, which I left it there on the daily, so you can see where it's going to be before possibly moving its way back down again. I don't know if it would get down. It could get down below these lows, since there is two equal lows. See, anytime I see two equal lows, I think false support. Anytime anybody else sees two lows, they see that's a sign for a buy. They think that's support. I think the opposite, because anytime that whenever there's two lows and it comes back down to that area, almost always 90% of the time it will drop below it, because everybody else has their buy limit set in that area with short stop losses. So smart money will sell it really quick, short it really quick, because they have enough money and enough power to drive that chart down below there and take everybody else's money, and then hit the spot where they need to, which would probably be right around 132, 133 is what I'm thinking. Why? Because, again, if we were to put put a Fibonacci on it, that area is also where we see that weekly fair value gap. And it's almost right in the middle of that weekly fair value gap as well, which is what it likes to aim for. It likes to aim for the middle of these imbalances, or liquidity areas. So I wouldn't be surprised if it does go up and fill this area here and possibly get up to about 164 before we see another drop again all the way back down to about 135. So that's just what I'm thinking for Monero. Who knows? It could be something different. That's just what I'm thinking right off the bat. Next, I want to take a look at Ethereum. See what we got going with it. All right, so I have been looking at this one a little bit earlier, especially when it did have like its little blast off moment, and you can see it did have some swing highs right here. So those swing highs right there create liquidity, What I mean by create liquidity, I mean that, let's see here. I'm just going to delete everything else off of here because we don't need all this stuff on here. Okay. So right at this high is where most people would see, again, or most people would think there would be, uh, they would short it. They would see this as resistance because this high has already gotten here once. They think when it comes up here again, it would probably hit this and short. What does it do? Spike through it and then comes back down. And as soon as it comes back down, what does everybody do? Probably start selling along with it, thinking that's going to fall. Instead, what does it do? It stops itself. Boom, goes back up again. Comes back down again. Again, it's everybody's thinking probably resistance, thinking it's going to fall. What does it do? Boom, continues to move up, right? So that's what I was looking for. I was looking to see if it was actually going to just push on through this, or if it was actually going, because I'm looking to see if there's anywhere that it would fall to. I don't see any equal lows or anything like that that I can think of that it would want to drop to. Even if I were to just hide this really quick and see, yeah, I really don't see anything that would be that it would try to go down below, and that would be holding liquidity, um, unlike above, to where we have quite a bit of liquidity, such as this. First is this one here, right? It runs through this, it stops, and here is, more than likely your bearish order block. Be this guy right here. It's your last green candle before the next succession of red candles close below it, right? I mean, there is a green candle up here. There's a 4-hour candle, but in the grand scheme of things, it could be just another red candle because the close is below, you know the you know the previous bearish candle's high. So the close, it didn't close above the bearish candle. It closed below the bearish candle's body. So in the succession of things, it looks like just another. And if you were to do like, let me think here. Uh, I can't think of any. Anyways, it would just look like another red candle. So that's why I think this is the bearish order block, right? Comes up, hits the top of it, and then probably just start falling backwards. But not for long though, because see here, I'm trying to see if there's any kind of formation, any smart money formation, like a low high, low or low scenario. Not seeing one. Yeah, it looks like it's all breaking structure. So if it's breaking structure, that's good. So you got a high, then you have another high that broke the structure. Then you have another high that's about to break the structure. So it seems like all of these. Oh, it's because this wick here. This wick right here tells it all. So whenever this wick right here comes up, it comes up past the previous ones. So what we call a rebalance, redeliver. So it's almost like that wick didn't even exist, and there was fair value gaps along the way. So it's coming up, reaching for these fair value gaps that may have been left behind inside these candles here. But now what I'd be looking for is this guy right here. That's the next area I'd be looking for. When is it going to hit? That's 7. That's about 1722, 1723, somewhere around there. And also, let me see. I see a huge area right here that has a fair value gap. So I see Ethereum moving up quite a bit, trying to get to. And but before I thought I said, Ethereum would probably be dropping to about around 1318, I think is what I said. And the reason I said that number was because I thought it would drop below this low here, right? And because that would be a liquidity point to where people would think that would be an easy buy, right? And it would drop below that and then move on up. But as I'm looking at over here, again, if you always look at the market maker buy or sell model, you got to look at the boxes as to where the accumulation is. So the accumulation is right here. Right there is the accumulation. And if that's where one of the areas is, and then you see an accumulation just right next to it almost, and then this guy comes down and hits the top of almost those two, then I honestly don't see a reason as to why it would fall down, even though there is a big gap, a big area right here as to where it would come down and try to fill or try to fill in for. Yeah, because that is quite a bit of a gap that it did not come back down and fill as an imbalance. So there's a huge imbalance down here in between 1288 and about 1318. So that's why I said 1318, to be honest, because of this imbalance right here. So I don't know. Is there a possibility that it could still come back down here and hit this 1318? I don't know. It just depends. But the way it's looking right now, as it keeps breaking the structures, and I'm looking at a 4-hour structure here. If it keeps breaking higher highs, I don't see why not. Let me look at the daily. In the daily, it looks like it keeps on breaking structure as well. Again, I think it's got to get above the 1722. If it gets above that and closes above that on the day or the week, then I think we're in good shape for it to keep moving forward. But if not, if we're getting close to that, and as you can see, we are hitting that bearish order block right now, and I think that maybe what could be what is giving it that rejection right here. It did come up and sweep above those highs to take out that liquidity above it, right? So anybody that was trying to sell short there got wiped out. It punched through it, right, and took anybody out that was trying to sell short with a short stop loss, right? But now it could be trying to retreat because I see a pretty large daily fair value gap. Let me see here. Right here. So see that pretty large daily fair value gap that would probably might try to come down to fill that. And if it came down and filled that, it doesn't really break structure. What it does do, all it does do is hit a bullish order block. So that bullish order block would be sitting right here where this last red candle is, going down before it pops back up. So I could see it doing that, just pulling back just a little bit, popping this, and then maybe going right back up. But we'll have to see. We'll have to see if it wants to go down even further and try to make its way down to this 1318 area that I've been talking about. Don't know. We'll have to see. Moving on to Bitcoin. All right, Bitcoin's not been very exciting at all lately, as you can see. Other than the fact that it's been kind of static. There hasn't been too much going on. In fact, I drew a lot of this out ahead of time. These areas that say discount, discount price, discount, and I drew these out way ahead of time, and it hit these discount prices almost every time. I was like, I should have bought every time it's where it said discount, and look, even right here where it says discount. It didn't actually. Well, that I guess that would have been the discount on the sell side. It looks like, but sure enough, it did hit it. It did hit every single one of these discount areas that I thought it would hit. But now it has fallen back down to, I wouldn't say equal, but let me see here. Let me draw a different type of fib, um, going all the way back down, or all the way back to June. All right, June, and then all right, there we go. And then we have the thing is that we have the monthly fair value gap right here. All right, being that if we were to put this on a monthly time frame, the span between 2 months where the wicks don't touch, that's where that monthly fair value gap comes from. So I'm going to go to the monthly time frame just to show that to you. Yep, it even draws it for me on with this indicator. Here we go. Yep, here it is. And this is the month of November of 2020. Wow, almost 2 years ago. There is that fair value gap where it just, and that fair value gap, or that let me see here. I don't even know where that wick goes, but that candle is the one that basically propelled it above the 2017 highs. So now it's coming back down into that fair value gap, and it hit it. The question is it going to try to fill the rest of it, or at least fill it halfway? Because if it fills it halfway, then we're looking at Bitcoin coming down to about 16,000 almost, somewhere around in there, which would almost make sense. If we look at the formation of it, no, I don't think so. I was trying to see if there was like a breaker formation to where if it went high, lower, low, and then a high, but I don't really see that happening. So since I don't really see that happening, it could, it could get to the bottom of that fair value gap because of that, and because there is that large imbalance on that large time frame that nobody really takes the time to look for. It could be looking to possibly fall down in that direction, and that would be somewhere around 14,000. And that would be probably about the lowest that it would get. It may get a little bit lower considering there is another fair value gap just below that. But that's as low as it gets. That is around 12,000 right there. $12,086 that was where that fair value gap ends. It would hit a monthly bullish order block, and I guarantee you at that point it would send it going the other way. Again, we're talking about the monthly, so we're talking about riding the waves of what we saw the last couple of years, and it coming down and finally filling in those gaps that it hasn't filled. And I remember when these gaps started, when these gaps were created, because I was scared and I told everybody, I said, you do realize that it is going to come back down and going to try to fill these gaps, right? And nobody believed me. And here we are. I mean, you can go back and watch my videos from probably a couple of years ago, and you'll see me saying this, that hey, I'm pretty sure that it's going to come back down to this area. But hey, believe what you want. But I'm sure my videos will tell you exactly what I said, and that is what I said. And I know I said that we'll be trying to come back down and fill in these gaps. And I know for a fact, especially when it came to Bitcoin and Ethereum, around the time Mr. Musk said that they're putting their money in in Bitcoin and in a trust or whatever, and it took off, and I was like, ooh, and just made that huge that candle. The only thing I could think of was, man, it's gonna come back down and fill that, and it did. Sure enough, it did, and it's come back down and filled even more. So I would not be surprised to see it come back down to 14,000 at some point. So be prepared for that. Or, I don't know, dude, who knows? It may actually try to pick up some steam. But looking at it right now, I want to put an eye on this. We have some relatively equal lows, which is generally not good, because that is the false sense of oh, the false sense of support. Boom, right there. All these lows right here, they may not be equal, but they're close enough to being equal to where everybody thinks that there's a support level somewhere around in here, and then all of a sudden it comes up and boom, it'll just drop right to the bottom. And if you look at the Williams percentage R, which is my other indicator down here, the other one I like to use, I usually don't like to use indicators, but I mean, the one up top is technical. I mean, it's really not an indicator. It's just generally what I usually draw on my own charts, which it draws the fair value gaps, it draws the breaker structures, it draws um, the rejection blocks, things like that. Things that I would normally draw. It just draws it out for you. So there you go. Boom. It's simple enough. So it's really not an indicator of any kind, other than, hey, this is where uh, you know these things are happening at these candles. But the Williams percentage R, I do like to kind of use to look at to see. It's more like a velocity type thing. So it's kind of like a stochastic, but it actually has more velocity to it. So as you can see, it's kind of like, you know you got from here, from August 22nd to August. Let me see here. August 28th to about August 30th. You can see it. You have this big run up, and it does that, and you can see there's quite a bit of velocity to it. So you can see, there's quite some speed, and you could tell it's moving around a lot. And then, as you can see now, the velocity is kind of waning out and kind of lowering down, which could be a hint that we could see some potential velocity trying to pick up soon. So, um, which direction that velocity would be going, I don't know. I mean, I really don't do the whole divergence thing. No, it's never really worked for me, because as soon as I go, oh look, there's divergence in this and this, and versus the chart, it always goes the other way. That's what smart money wants you to think. They want you to think that that you're smart by doing this divergence thing, when it's really not even there. So that's why I don't ever bother with it. What you got to look for is, you got to look for where liquidity is, and you got to look for where the areas of uh, uh, well, first I said liquidity, then like the fair value gaps, things like that. I can't think of what the name of it is exactly right now, but yeah, fair value gaps, areas to where there would be a gap in between candles, things like that. uh, that's where you would want to look, because that's where price wants to, move toward. Um, it's just the kind of like the law of candles and the law of smart money. Something I've seen doing this couple of years now, and I probably won't stop seeing it. So I'm just trying to pass it on to you guys. All right, next what we're going to look at is Avalanche, just because of its movement today. So again, talking about being range bound, like Monero was, and it's kind of like the same way. It was very, very range bound. Avalanche, we've seen Avalanche get upwards. Geez, God, almost $100 or so. This year, or was it last year? I can't remember. I remember just Avalanche being a crap ton of money at one point. Yeah, April 2022. So earlier this year, geez, it was, almost up in the upper 80s, almost 90s. And then, whoa, was it April? Just falls. And then ever since then, been right about there. Yeah, since about May. May is when we've seen that last high after we've seen that fall. And I want to say right there, you see that big drop down into here, boom, bounces back up, makes a higher on 37 bucks. We haven't seen it cross that $37 mark since. So, but today it did make a little bit of a run. I don't know if you noticed or not. Let me see here. But if you get in closer, I'm on the 4 hour here. Um, Made a little bit of a run. It did not get above the breaker structure yet. It did break this structure. So as you can see right now, all the breaker structures are down below it because that's where it's thinking the structures are. Here you can see an order block, and that would be a negative order block. So it went through the negative order block. So if it went through the negative order block, the breaker structure should be on top now. And it's closed above the negative order block, or the bearish order block, I should say. So we got the high of this little wave here, running from here to here at around $20.64. Did fall back into the smart money buy zone. So that smart money buy zone was, see here, rectangle. Anywhere between here and here. There you go. So that'd be anywhere between 1868 and, yeah, anywhere below 1868 would have been a smart money buy zone. So it looks like that would have been today. It looks like they loaded up today. And as soon as they loaded up today, boom, it took off. But what we do have is we have some equal lows. I don't know if did you see that or not. Boom, right there, some equal lows. So since we do have some equal lows, that's what I'm going to be worried about. I would, and since it didn't break this structure, it's wanting to reach for these fair value gaps up here. I know it is. You can tell fair value gaps. And look, the golden ratio at 127%, right at a fair value gap. So it's wanting to get up here, but it looks like it could fall backwards first. But I don't know, because where it's stopping at those two equal points is right where that bullish order block begins. So that bullish order block is where that last red candle is before it moves up. So you see, comes up, falls down, boom, comes up, falls down, boom, and then bounces again. So I don't know. I don't know if it's going to come back down into that area and try to get lower. Uh, it easily could. It easily could, just because there's two equal lows, and when there's two equal lows, that garners a lot of liquidity in those areas, and that makes a lot of people automatically set up their buy limits in those areas. And when they do that, then that's almost like a recipe for a disaster, because then the chart will know to move toward that area and then drop. I mean, not just drop toward those two lows, but also drop toward the next low as well. Because then that's the next liquidity point. Everybody's thinking that, okay, well, then this is definitely support. Well, no, it'll probably go boom below that. And then you have this guy over here. That is your last down candle before the next consecution of up candles close above it. So it could make its way back down to there, which is what, $17.12. It could. It very well could. And then if it did that, and look, there's even a fair value gap below that, somewhere around $14. I don't think it's gonna get that far below there. Um, but man, it could. But there are a lot of fair value gaps up here that it does. What you can tell, it's probably wanting to reach up to, and I'm thinking it's wanting to reach up there as well. So right now we're just in a very, very odd position with crypto. It's just we're in an in between phase. It's that things went crazy in 2020, and things kind of fell down this year, and then now I think we've kind of settled in like an area to where the market finally where it wants to be, um, and especially with the economy where it is, you know, not for sure exactly where we're going to see the charts go, and I'm not 100% either. But hey, I'm just trying to make a video trying to tell you what happens in smart money, and what we could possibly see. So that's all I got for you guys today. Thanks for watching, and as always, remember to wear your pants.